All right. Hello, everybody. Welcome back to another episode of the Tech Bros. I'm here today with Tanner and Roy. Tanner, what's up?
Not much. Someone just said that my computer probably crashed or that it was me that was late. It was not. I was not late.
Tanner, yeah, we were just all three talking before we went live. So
yeah,
that's what kept us late. Roy, how are you?
Doing good, man. All exciting week. Always. It just seems like we're in the middle of earnings season. Lots of stuff to talk about. Life is good.
All right, so I think we got some pretty interesting pieces of news. We got this breaking bombshell after hours.
Yeah. Oh yeah.
That I think we start off with, and then we'll get into Nvidia and SoFi and all that good stuff. But yeah, Tanner, I found out when you posted it. I guess Hood got snubbed again for the S&P.
They did. Yeah. IBKR, which actually makes me think that Hood is going to not get in for a while because it's exactly the same business practice essentially. And they also just put in Coinbase recently. So they've been putting in a lot of brokerages. I think that makes it even harder for Robinhood to get in the near term. But I expected this, honestly. From the S&P 500, I do expect them to put in the large names that are a little bit more legacy. I shouldn't say legacy, just a little bit more mature. And, Robinhood will be there, but they're not really pricing in the growth and the culture of Robinhood, which I think is the big thing that institutions and these sort of committees that pick out these names, they sort of miss, is that very few people get the, referral bonus or the low CAC cost that Robinhood gets. And Interactive Brokers is not nearly going to have the margin that Robinhood gets, and that you're seeing the early signs of a real compounder. But like I said, it is early signs. So they're looking at the market cap, they're looking at the multiple on the stock, and it does look a little bit higher than IBKR, but Robinhood will look cheap in the long term.
Roy, what was your reaction to this?
It actually reminded me of when the Trade Desk got in over App 11. It's like, yeah, Trade Desk deserves it. App 11's a great company. I would have picked App 11 personally, but both are good choices. And I don't think it means that App 11 doesn't get in. Likewise here, IBKR versus Robinhood. Of course, I think all three of us would have picked Robinhood, but we shouldn't be shocked that the S&P 500 chooses IBKR, which is a little bit more established. So matter of time. And if institutions want to load up at a higher level, then I'm okay with that.
Yeah, I mean, as soon as I saw the news, I wasn't even that upset about it. It's like, does everyone know? I mean, some people might know because we talked about it before, but well, do you guys, Roy, do you know the net worth of the IBKR founder, Thomas Petterfy?
I don't.
Tanner, do you know?
No.
Oh, you guys didn't know that? Okay. What do you guys think it is?
A lot?
How much is a lot? Give me a number.
$500 million.
Well, let me. Okay. IBKR is worth $105 billion.
Yeah, I have no idea who he is. So
if he was the founder, I still think.
Okay, so yeah, he is the founder. So what do you think his net worth is now?
Yeah, I don't know. $6 billion.
Okay, and Roy, give me a better guess than $500 million.
Okay, if we're IBKR is $80 billion, is that right?
$105 billion company.
Let's say
more tomorrow.
Let me say $10 billion.
This freaked me out when I saw it too. I could not believe it. It's worth $73 billion, bro.
Nice.
He owns 70% of the company at 81 years old.
Oh, wow.
So wow. I couldn't get upset at it. I mean, the guy's been working his whole life for building this company, and now he gets in his 80s. I mean, like, it makes sense inevitably that they were going to get in, and they deserve it. It's a great company. Now, are they a top 500 company in America? Probably, but
yeah.
Is Hood a more exciting company? Yeah. So
yeah, I don't think that they shouldn't be in. They should.
Yeah, absolutely.
It was a good ad, but it's just I think that it pushes back the chances that Robinhood gets in.
I'm not sure if it really pushes it back too much. Like if anything, Coinbase and then IBKR as well, Block recently too. I think what that's indicating, at least to me, I could be wrong. We'll find out, is if they're willing to be overweight in fintech right now. And so We'll see. Now, what would be really funny is if you're right, it's going to be like 3 quarters before Robinhood gets in, and then they do Robinhood and SoFi at the same time. That would be hilarious.
I did think there is a chance that Robinhood and SoFi gets in the same rebalance.
I'm okay with that. Let's do it in September.
Yeah.
Do you, Tanner, do you think that in September they say we don't have, because there's still some really shitty companies like Enphase and the S&P. Do you think they say we don't need to do a rebalance anymore in September?
Yeah, definitely. It looked like they moved around a lot of names, but really they didn't. I mean, IBKR got bumped up to the S&P 500, so it got kicked out of the 400. And so there wasn't a whole lot of rebalancing done. But that doesn't mean that they don't need to do like the time that we were streaming at the same time. I think it was like June or something. They didn't make a single move, so they can do that again. But I still think that they will do a lot more rebalances. I'm just seeing a lot of changes in finance. It's just surprising how many names that have changed in finance. Like I even forgot about Block. That's another one. So Block, now IBKR, Coinbase, all of these names. I think that actually doesn't make it more bullish that Robinhood gets in. I think that makes it less. Like they can only pick so many names from the industry. But they also can pick out a lot of, regional or community banks that are in the S&P 500 that probably don't even belong to be there and are not even eligible anymore. And that's probably, time as well.
Yeah, typically, and it doesn't matter too much. Like it doesn't really change the thesis for Robinhood or anything. It's one of those things that's nice for the company and the employees. It's like, hey, you guys are an amazing company. You're in the big boys club now. But the market cap size is also worth looking at. Usually when you're a publicly traded company that meets the qualifications and you're the largest market cap out there, and so that's AppLovin and Robinhood, it's just a matter of time when you get it. It's not a if, it's a when, and usually that's within several quarters, not always. But we've seen this with a lot of other names. Dell was one of those, from a year and a half, 2 years ago. DoorDash, I believe, as well. So yeah, there's a lot of other good candidates out there. I'm seeing VRT, Vive is a good one. I mean, there's a bunch. So
yeah.
But when you have that massive size of a market cap, they definitely do take that under consideration because it's just staring them in the face right there. And so, yeah, maybe a while. Tanner might be right. I hope not, but I mean, doesn't really change anything for the stock.
Doesn't matter. It doesn't matter. It's just short-term gains that would be interesting, like fun as a shareholder, which SoFi's getting a little bit of that tomorrow, which is a little exciting.
Let's transition to SoFi. I think that's all the Robinhood. Well, there might be a couple of things with Robinhood we'll get back to, but
yeah,
SoFi
tiny things. We know is the speakers now of the Robinhood Summit and these sort of things, but
yeah. So these guys had a record close. I'm gonna go turn on the AC real quick because it's way too hot in my room. But
yeah,
Tanner, we'll start off with you. Your thoughts on $26 close for the first time in 3 years?
I mean, we made it. It was an excellent feeling. I went live for the close, and I just it's been a long time. We finally got there. I still think that they end up going higher. I think whenever a company, and he isn't scrolled back here, but if we scroll back a little bit, they've kind of risen a lot in a short period of time. That can prove to have quick sell-offs. But I think overall the market is starting to realize, like you even see from analysts putting up not just higher price targets, but higher earnings expectations, that the market is starting to realize that SoFi is going to grow faster than they originally thought. And I think that deserves a premium. Whenever Anthony Noto comes out before and he says, hey, we're going to grow 20% for decades, and then he comes out and later corrects himself and he says, we're going to grow at 25% for decades, that is a huge difference. Analysts have recently come out and said, hey, we're going to do, we think they're going to do 30% EBITDA margins long term. Now they're coming out and saying SoFi is going to do 40% EBITDA margins long term. It's a huge difference. So I'm just, SoFi has been at an inflection point since we've seen the loan platform business, and I think that we could just be getting started here. So very exciting. Very excited about Robinhood. Very excited about SoFi. I think that they're both winners.
Yeah, that's awesome.
Roy, your thoughts on this?
Yeah. So I mean, like they've been executing very well as a company for a long time. Just for SoFi, they've shifted from having ridiculous headwinds, just persistent through regulation, through macro, to now actually quite a few tailwinds. The banking license was still more beneficial than not, but because of regulation, a lot of things are shifting so that having a banking license actually has a number of advantages. And frankly, it should have all the time. Now, it may be get skewed too far over on one side or the other, but it's going to be really interesting to see what this company does now that it's public with significant tailwinds, especially once that tech stack is fully shifted over. I mean, you look at the quarter two, like it just ridiculous earnings. Like out of all the companies I cover, at least so far, we'll see what Nvidia does. Palantir had the most ridiculous quarter ever, but SoFi was like really, really good. It easily the second best out of any other company that I looked at this quarter. It got the market's attention. It got a lot of focus. People understand that this is not a meme company just because retail's in it. And I think that Anthony Noto's conservative guidance, he started to talk a little bit less conservative, and part of that probably is because of regulatory clarity and macro conditions as well. And he just realizes, like, hey, we control our own destiny right now, not the market. We're going to do a lot with this. So rate cuts also don't hurt.
Yeah.
Well, I think the stock is going through a re-rating, and I think I think both of you guys last week, I know Tanner made a specific video about like getting ready to really buy in the 21, 22 range. I mean, like, look, it makes sense. Worked out. I mean, if we're going through a re-rating from rate cuts and taking management seriously on the EBITDA margin growth, which ironically is, you know, what a tech company does, right? They have better operating leverage. So this whole debate we've been having about, is it perceived as a company? Is it a tech company? Is it not a tech company? From my understanding, Galileo and Technisys, that's not the story here. The story is adjusted operating leverage going higher, and then top line revenue growth being just so impressive for a bank, a tech company, whatever you want to call it, that it's hard to ignore. Any company in general, it's hard to ignore that. And then Noto being serious about what he's doing. That the whole dilution thing they did seems like it's not a big deal anymore. Street digested it. They're ready to move on and they can go forward. So I guess the question to you both is, because you're deeper into SoFi than I am, is price discovery. Do you think that's on the horizon? And could this be a $40 stock by the end of the year?
40. I mean, it's going to depend a lot on macro for that. Now, if we continue to be in a very persistent bull market, that could happen, especially depending on what they put up quarter three. Quarter two was against a little bit weaker comps, but if they do something similar in quarter three against much stronger comps, they're able to actually complete that tech stack. Their cadence continues to increase. They're able to relaunch the crypto invest platform. There's a lot of this. They don't need all of that. And we get rate cuts. It's possible. I think a new all-time high is quite likely at this point. It's 28 and some change. So it's, I know right now after hours, the market's pulling back a little bit, but yeah, I mean, like there's a lot of upside left in the stock. It doesn't feel overvalued here at all. If I had no SoFi position, I probably would buy some shares. But thankfully we got in and most of the position was built in single digits. So now it's just fun time.
Tanner, how much hopium do you want to give us here? Does this like have a could this have a Robinhood type of breakout?
Well, I mean, I think we are to some
their
degree.
Numbers are not that off, right? Like they're going to do roughly the same amount of revenue. Robinhood's going to get a little bit more, but
if you look at them on a price to earnings ratio or even a forward basis, they're pretty much well lined up right now. They're at about the same multiples right now. But if you look in the past year, SoFi's up, I think 250% roughly. So they had, like, we've moved a lot already. $40 by end of year is I would get a little bit worried there. That seems like a big pull forward for what's coming ahead.
No, but hold on. That's what we said about Palantir, and that's what we said about Hood.
I know, but I don't like the moves that Palantir has made. Like, I think that
okay, so get rid of Palantir. Hood, I mean, like, if SoFi ends up putting up, is that comparable?
If SoFi ends up putting up a 40% growth rate year over year target on this strong comp, I will say absolutely. Like 100% we get to 40, but that's most likely not going to happen. So if there is some virality, they're catching steam, and that could happen with rate cuts. I mean, the loan growth could be insane. Like, we really have not seen how SoFi operates in a truly bullish environment. They've always, since I've held them, have been held back by major tailwinds. Now, home loans, personal loans, student loans, all off to the races. Credit cards have recovered. Their money, their SoFi Invest is all back to normals. They're getting crypto started. You know, everything is a tailwind for them right now. Even Galileo, to some extent. I know that there's been a lot of hate on them, but their growth expected for the end of the year is still expected to ramp much higher than where we are today. And then by Q1 of 2026, they are saying, hey, we are closing a lot of deals right now. So I don't think the market's fully ready for what we're going to see over the next little bit. But my price target right now is I think that we're going to see the 40s over the next 4 quarter prints. So not 4 months. Big difference.
Yeah, I tend to agree that it's probably not going, but in a bull market, like, things can get pricey.
Yeah.
Yep. So never underestimate that. Be careful with your covered calls. Now, one difference, or there's like 2 differences that I think are important to note with SoFi.
Hold on, before you continue and get into your 2 differences.
Breaking news.
All right, boys, I'm in. There you go. You got 50 shares.
Yes, he's back.
There you go.
I'm back.
First time
holding SoFi in a year. No, I saw the options, but no stock. So
yeah.
All right, there you go. Let's go to 30, boys. It's time.
The amount of times I've talked with Amit, and he goes, honestly, man, like, be honest. Are we gonna get to $20 by January of 2026? Like, I need to know. And I was like, bro, yes.
I'm like, Tanner, it's got 13. I need it to be at 20. I don't know if you realize 20 is $7 more than 13. He's like, bro, it'll get there.
Yeah.
So what's wild is, I think at 33 or 34, I sold some profit off of some options, because you got to sell options, take profits on those. But I think at 33 or 34, well, if Robinhood stays right where it's at, SoFi becomes my largest position, which is like,
wait. Say that again.
If Robinhood stays at the current price, I don't change anything. I don't sell anything. And so if I goes to, I think 33 or 34, it becomes my largest position. So that's like,
oh, so you're pretty heavy in SoFi.
Well, yeah, a lot of it has been options, like a lot, heavily skewed now, especially because I was buying a lot of $10 strike options when the stock was like $7 or $8. So it's up a little bit. But as far as like the differences going back, cost control is something that Robinhood has that SoFi doesn't. So 90% of the costs are fixed for Robinhood. That means when they have that breakout quarter, which is absolutely ridiculous, most of that goes to the bottom line. SoFi does not have that, but what they do have is they have elements of their business that are cyclical. They'll never have like a pure golden confluence like Robinhood had, where everything is firing on all cylinders. But when macro conditions are in a certain direction, like rates are falling, and it's like elements of their business accelerate rapidly. In other environments, others accelerate more quickly as well. So what I'm saying basically is they will get to 40. Like, you don't have to worry about cyclicality. Like, every single quarter, it's higher revenue than the previous one. Everything is growing, some more than others, some faster than others. And so this is basically just a juggernaut at this point. It's not a rabbit that's off to the races, and it's not a tortoise either. Like, that's a tortoise in the hare is a bad analogy, but it's like 40 is not, I hate to say inevitable, but it feels inevitable. I'll say it that way. Versus with Robinhood, like, with what's happening in crypto, if we get crypto winter, everything pulls back. Yeah, we could see, lower revenues for a while. Great business, still a long-term shareholder. So it's a very different type of business. And so I think that the price accumulation as shareholders will be persistent over time, but not necessarily as rapid with something that has that cost control and hyper cyclical quarters.
Yeah, I think the more that SoFi can move their earnings away from putting loans on their own balance sheet and instead selling them off to others, the bigger the multiple that SoFi can get. And that's what we've seen over time. And they've made their own slides on their slide deck for this to show off, hey, you know what? We are making more money through fee-based revenue than risk assets, and the stock has improved because of that. I think if we get an investor day and they show off the quality of their customers, the demographics, like truly let institutional and retail investors digest and understand this business, I think that also allows us to get a higher multiple as well. But it's funny how whenever the stock goes up, no one questions Noto, eh?
Yeah, no, the stock's going up. Noto's fine. Noto's good.
Yeah. Dude's been a leader his whole life. It goes down, fire that guy.
I mean, look, this is something that I think everyone is guilty of to some extent. Like when the stock goes down, everyone gets shit on, and there are some valid reasons to be. There are some valid things to criticize someone on or a company on when the stock is in the gutter. That's why we had that entire debate, right? The stock was stuck at 13 while the bull market was commencing from the Liberation Day, but SoFi was stuck. And that's why we had that discussion. Having said that, this is where you figure out who the hell's a real bull, right? And so you both have been defending Noto explicitly. Tanner, your entire channel for the past 3 years has been dedicated to that. It's just the stock hasn't cooperated. Now it is. Same thing for me and Roy with Carp, right? We had a lot of people say a lot of shit about Carp, but we were defending him. And so I think it's just a question now of how big can it get? And that's why I'm asking, like, is buying shares of SoFi at 26 a precursor to a big move? And again, at 7 or 8, like people think, oh, well, it's already 3x. Yeah, but that was Hood and Palantir, right? Like, could SoFi, forget like 100, but maybe even 40, 50 by next year? That would still be a massive return. And I wonder if everything's in the right direction, if that plays out.
They're rate sensitive. So let's not, similar to Robinhood, unlike Palantir, this is the one thing I'll give Palantir. Come rain or shine, they have a good business. And that's really unique. Robinhood honestly can face the same criticism as SoFi. That's why I think that SoFi can get a premium, because Robinhood got one. But if the market goes bearish, Robinhood gets thrown in the gutter. So SoFi is a similar way. We start seeing hawkish signs, potential rate hikes, stuff like this. SoFi stock is going to go not back to where it was, because fundamentally we have more customers. There's higher average revenue per user, better back end now, but it will go down. But that same thing with Robinhood. So if you're comfortable with that type of risk, that cyclicality, then so SoFi can be an amazing play. And I think the more that they're able to sell loans, like right now, personal loans, what's funny about personal loans, it actually doesn't take a lot of capital to make a personal loan business work. What takes a lot of capital is to make a home loan business work. And that is a much, much bigger TAM. But if they can end up making that work with the loan platform business, which currently does not operate, those will be the biggest catalysts. People talk about crypto. People talk about all these other products that they want to see from SoFi. If SoFi brings the loan platform business to student loans, home loans, or potentially other, this is another thing that I think will happen into the future, is SoFi will then go to companies like Robinhood and say, we'll handle your underwriting 100%. Not only will we do the loan platform business on our platform, we'll do it on your platform. You give us these statistics and we will tell you whether that's a good customer or not. And we'll use your money. At that point, it's game over. Like, forget Upstart. SoFi is Upstart. Like, they are the big dog. And that's completely within their wheelhouse.
And just like it was with Coinbase back in the previous crypto winter, when a lot of the competition went belly up, that's happened in the student loan business. There's been massive consolidation. Repayment and forgiveness is not a thing. It's not on the table at all. And, there's a lot of delinquency as it relates to student loans. So that's a side of the business that's probably going to ramp up quite a bit, especially if we do get some rate cuts.
Or if the Trump administration makes big changes.
Yeah.
But
I expect that that's probably going to be the next product that they spin off of the loan platform business. And the nice thing about that, again, is like they're not capital constrained. They don't have to. They're basically, it's a loan referral type of business. So there's no balance sheet risk or anything. They're not going to like loan too much and then run out of money to be able to loan. And they are the de facto leader in the market. Like they are. Just that side of the business has been dead in the water for like 5 years, and yet SoFi has grown. Mortgages will take a little while longer. Federal Reserve cutting rates, it doesn't impact the mortgage rate much. So it will take some time. I don't know exactly when, but that's cyclical as well. And if we get a point, let's say hypothetically we're a year and a half out, and the mortgage realty and mortgage business is really heating up, and student loans are doing well as well, and everything else is the same for SoFi, that's a business that's worth a lot more money. It's an if. It depends on macro, but the nice thing is they're growing no matter what the macro is.
Yeah, but Tanner, what about their monthly active users?
The monthly active users, I mean, if we don't see it, I'm going to sell. But no, I think that SoFi is going to show you what you need to see to make a thesis in this business. And I'm not sure that monthly actives fits into that. We can differ in opinions, but I don't even think it matters for Robinhood's business either.
No, I was joking. To your point, it's funny, dude. Like forget SoFi, any stock when it's in the gutter, people are going to try to come up with reasons for why, right? And one of the reasons I never sold my SoFi options, even when it was in the gutter, and like took whatever $2,000-$3,000 it was and put into something else. Now it's 10x. Noto, ironically, has gotten me my first 10x in the options market, is because like, yeah, there are things there that I didn't like about them. A lot of things that a lot of the SoFi community disagreed about how I perceive the company about, but it's still a freaking good company. It's a fundamentally strong company. It's not a piece of shit garbage. And I don't think any of us have ever said that. The question was, would they be able to get re-rated? And they did, apparently. Why are you laughing?
I definitely didn't call them
a piece of
what
shit
you
garbage.
said.
Yes. What did I call them? Oh yeah, piece of shit garbage. Yeah. No, my biggest concern with SoFi was always around how is Noto communicating, which I think has gotten better, even if it's not, him doing podcasts with people. And then B was their operating leverage. And so although Technisys and Galileo have not scaled, which if it does scale, I think there's a world in which this is just beginning, right? If that gets to like 30-40% growth, which I know Noto's being very conservative about, but then this becomes the reason I bought it back in 2022 with you guys. Yeah. It was AWS and FinTech. But operating leverage is getting better. And that is a fundamental characteristic of tech companies, which is also why I'm like, dude, all right, at 26, like the operating leverage even gets better 2-3% every quarter. This is probably going to 35-40. So
I think even if we go back down, I think the thing that is exciting for people for SoFi is that people say, oh, well, you know what? It's going to get traded like a bank or something like this. It's like we're at a 4+ price to book. Like we're almost at a 4.5 times price to book. The market is
Does that scare you? Does that scare you?
No, I think that's where it should be. Like that's what a tech company that is in the financial sector can be comfortably placed at. I think like Nubank's at like 9 or something. Like that happens. It's just funny that a bunch of these banking experts came out and said, oh, this doesn't happen for banks. And clearly the market is okay with accepting that risk if the top line growth, it's not all about the metrics that they're looking at. I mean, there are real tech investors that look at SoFi in terms of taking customers away from big banks, gaining trust, gaining unbranded or unaided brand awareness, and just, doing what Robinhood's doing or other fintechs that you see. The only difference is that SoFi is using their own deposits to fund their own loans. Like people turn this whole banking term into something evil. It's like, no, there's just a tech company and they wanted additional levers to pull. Like
levers?
What do you call them?
Is that Canadian?
I don't know. Is it levers?
I've never heard anyone say lever.
How do you say sculpture, Amit?
Okay, so see.
Oh, okay, sorry. Go ahead. I've never heard somebody talk about someone in a glass house throwing stones. This guy can't speak, and yet he's telling me how to pronounce levers. Say sculpture real quick.
Sculpture.
Okay, well,
good job.
Where's I don't know how to. What's that? How do I say that place without saying it? Say Massachusetts.
Okay, that one. There's Massachusetts. I can't say that shit.
Never move there. Never go there.
Yeah, I'm saying I'm rubbing off on you, but no, you're right. Like they had levers they could pull to accentuate their ability to be recognized more as a company that should be getting a multiple. But this is why I'm kind of harping on you guys on this. Like, could this really get a multiple? Like, is buying shares at 26 not that scary?
Yeah, sculptures. Yeah, that's what it was.
Yeah, well, Yeah, like the other part of it too, like I mentioned it, some of it, but like the regulatory stuff is just it's helped Robinhood immensely at the beginning of the year. We saw that shift actually as soon as Trump got elected. We saw a lot of impact as far as when David Sachs was brought on as a crypto czar. Some of that helps SoFi too. Of course, banks can now get back into crypto. They're still kind of waiting for pieces. A lot of it, by the way, is just that it may be legal. Some things are legal, but regulators aren't sure what to do with it. There's no like playbook. So one of the articles that I read today, which is really interesting by Simon Taylor, was about tokenizing deposits. Anthony Noah has talked about tokenizing loans, which is really interesting. There's a whole lot that they can do as far as like one of the like little nerdy things is banks basically had to give away API access for free to a bunch of fintechs as much and as often as they wanted to be accessed. They couldn't charge for it, couldn't restrict it, had to maintain that technology. Now, I don't think that's too onerous, but there are some fintechs that took a lot of advantage of that. And with CFPB 1033 being vacated, which is the rule that mandated that, JP Morgan Chase and a couple other banks have noted like, hey, we're going to start charging. Now, it's not going to be like a huge amount. It's got to be underneath the amount that debit cards charge. But there's a whole bunch of little things just like that line up. Like one of the others is there's a cap on interchange amounts if you have more than 10 billion in assets as a bank. SoFi is limited there. Now, uncapped banks, they can charge about twice as much on debit cards. You look at the interchange, the amount that SoFi is doing based on the 10Qs, that's growing really rapidly too. So credit cards are improving. That's been a drag. The Invest platform has been a drag. I think with crypto, it won't be. And so there's just a lot of little things that add up to not such a little thing over time. So these are exciting times. Just tailwinds instead of headwinds makes a lot of difference.
Bro, it's actually funny. JP Morgan just increased the rate in which they charge for checking accounts. It went from like $12 to $15 a month for monthly fees for people that have like a certain balance that's underneath. Like they really do not, they're trying to push out their lower rung customers. They're too expensive for them to house them on their platform. And so it's just, fintech is so well placed right now. They're the only area in which the majority of the American population can actually bank and actually be treated properly. And that includes Chime and other fintechs that I don't currently hold right now that I still think will do well over time. But you can see why SoFi is catching a big premium whenever you compare those companies one-to-one, And I think that's another thing that's very exciting. There definitely will be a lot of consolidation in fintech. Very similarly, I think a lot of software names right now are getting priced lower because I think people are thinking like Palantir is going to eat everyone's lunch and there's going to be some consolidation in software. I think the same thing is going to happen in fintech. Many names, Vero, Current, all these, they're falling off. Like,
dude, how is Chime even a public company?
It's weird, right? It's weird, but they came in so hot, so much more expensive than SoFi. And I said, this is going to help SoFi because people will be able to compare them one-to-one. And ever since, their valuations just flipped. SoFi had went so much higher than them. I'm not talking about, price per share. I'm talking about the multiples on their earnings and their revenue. Okay. And Chime has fallen off a cliff. So, yeah. And then look at that same time period, just over those last 2-3 months, what has happened to SoFi? I mean, that's the interesting part.
Yeah. There you go. Well, I'm happy about this because a lot of people in retail, a lot of people on my channel, a lot of people on your channels are heavy in SoFi. For whatever reason, over the past couple of years, people have been buying this thing heavy. And like, I think a lot of retail got to build an average between 7 and 15. So if they can just sit back for the next 10 years, like Josh, I don't know how many shares he has, but every time SoFi goes up $1, he's up like 700 grand or something crazy, right?
Yeah. It's been so freaking amazing to be a part of it, and it's awesome to see people who have started averages at $5, $6, $7, $8 a share, and watching what the stock has done and what I believe that it will do. I don't think that this is some manic pop and that I'm hoping that there's a short squeeze. No, I'm just seeing a very strong business, And if we get a short squeeze in the meantime, I mean, I'm not going to, I'm happy with that too. But no, I really do think that I'm just holding a fundamentally strong business, and the community's making an absolute fortune. I'm seeing it all over Twitter, people making, their first 100 grand, first $1 million betting on companies that, are taking total addressable markets and taking market share in massive total addressable markets. So very, very exciting and happy for everyone. It's unbelievable.
Before we move on to Nvidia, did you guys see the iced coffee hour with Vlad?
I saw like 2 minutes of it. I didn't see.
I saw like 30 minutes of it.
Okay, I pretty much listened to the whole thing. I don't think there's anything that we need to talk about from it.
No, they were talking a lot about the old GameStop moment and like memes about Graham Stephan and like when he bought and sold. It was not really a lot about the actual business.
The thing is, Vlad is doing so many podcasts that like now it's getting repetitive, and it's good that he's doing it. But like for people like us, we don't really need to listen to every little thing. So yeah, I don't think there's anything on this pod that we need to show people from that.
I learned a lot about the Cheeky Pints podcast. I think that gave us a lot of new perspective about how he actually operates the business.
Yeah, and that they can do a handstand.
Yes,
not a handstand push-up, which is incredibly hard, and he's jacked.
Okay, second question before Nvidia. Open Door. Are you guys buying it?
No. Happy it's happening because I bet the large percentage of the buyers are on Robinhood, but no.
Yeah, the thesis is flawed. It doesn't mean that you can't make money. It doesn't mean the stock can't go up, but it hinges basically on Open Door isn't a trash business, and I'm skeptical on that. And also it hinges on rate cuts by the Federal Reserve being bullish for the mortgage industry, which is wrong. I don't know, but that Pulte thinks otherwise, which, I mean, he's just factually wrong. Anyway, you look at Fred, you look at the numbers, there is a very weak correlation between Fed funds rate and the 30-year mortgage. So I wouldn't invest. Like, it's one of those things, like if you want to swing it, if you want to trade it, a lot of people want to invest it. I mean, it's their money, but if I see some deep flaws in the thesis, I avoid that. And congratulations to people making money. I love when retail wins, and most of that is retail. So
I would concur. So Open Door was the second highest traded stock today. First traded stock, second highest traded stock in the options market. Almost 800 million shares. Pretty much the same stats on Friday. JCal bought 25,000 shares. We got a lot of high publicity. Public figures just posting screenshots of buying.
Someone just said that Boeing bought Open Door. Is that a thing?
I wouldn't think so.
I don't think Boeing disclosed the position in Open Door. Maybe I'm wrong, but I think that this is super bullish hood. This is classic picks and shovels. A lot of this, I would say, dude, more than 50% of this activity is happening on hood. I don't think the Schwab guys are buying a ton of open. So like, you do get the side of hood that's becoming more mature. Then you get the side of hood that's degen, which has always been there, and they're degenning into Open Door. So it's great for Robinhood. But B is like, dude, this thing went up to 587 today. I would imagine when I got that notification, there was definitely FOMO on my part because it's inevitable, human nature. Everyone's like, man, I could have just bought like 1,000 shares, 100 shares, whatever. I think people are gonna have to fight that FOMO because I saw some screenshots of people loading up at 520, 530, 540, and then by the end of the day, back to 450. Why? There wasn't any fundamental reason. People dumped it. They're like, wait, why am I buying this company again? So I think for people in this thing, you're going to have to either buy it and hold long, hoping that the thesis plays out to 82, but trading around, it's not going to be easy because who would have expected 580 to 460, completely eliminating a 20% day in the span of, I think, 30 minutes that move happened?
Yeah, pure retail momentum, and retail used to be a joke as far as impact in the market. It's not so much of a joke anymore. So, I hope, for shareholders, it goes to 82 or whatever Eric Jackson had thrown out there. But those buying it like at 80 cents, like they were buying a business that was priced for bankruptcy. Now it's not. And I don't know. I'm just staying on the sidelines. And cheering on retail, but I'm not going to touch
it. I'm not even, dude, like cheering on retail makes sense for something like SoFi, where I want to see SoFi retail investors win because it's a good company. I don't know if Open Door is a good company, and I think a lot of the people that are pumping it, I don't understand how the SEC hasn't knocked on people's. Dude, some of the stuff I'm seeing is so explicit. It makes you wonder, is anything allowed in Trump's SEC? Like, is literally anything allowed? But I'm not really cheering for retail here. I don't think this is a retail story. This is people that want to pump and dump, literally. Unless there's a massive open door thesis that I'm totally missing, that retail.
I mean, you can get into stock for any reason. And ultimately, like, I made a ton of money back in 2021 off of AMC. Well, for me, it was a ton of money at the time. And there wasn't like much of a fundamental reason there. But people made money on games.
Did you feel you were the little guy going up against the big greedy super hedge funds that were pushing you down?
I mean, at that time, I do think that shorts had gotten ridiculously greedy and were trying to put businesses out of business that just couldn't open their doors. And I think it shouldn't be illegal, but I'm glad that they got slapped hard. And I developed a distaste for short selling at that point.
But there's not a massive short squeeze on open door. I mean, there's not like 150% of the float like it was in GameStop. It's just
it's entirely different. So I don't know. Sillier things can happen, but today, like I'd rather invest in companies that you can invest in companies that are volatile, that have a lot of upside, that don't have the risk. At least I don't think so. As Open Door, one of those for me, I talked about it, I think with you guys previously, was Air Test Systems, AAHR, and it went up almost 40% today. It's not a meme stock. It's been around for over 40 years, and it's profitable. Like, they have some really good products. They have some tailwinds. I saw a couple of people comment that they got in based on things.
Speaking of that, Roy, I gotta get you some dinner at Vegas for the Super.
All right, thanks.
Which, by the way, guys, just for future reference, don't do this. It's just complicated. Amit's got to go freaking pay tax on this and then go buy Amit dinner. Like, obviously he's not worried about it this time, but
you can just go on Roy's channel.
Also, it's easily passed around as people think.
I have to convert Canadian dollars to US dollars. That's another hard problem. Like, this,
$28 Canadian's like $3 American.
Yeah, $3. Yeah,
I think it's like 3 pennies, to be honest.
Yeah, I might actually owe you now, Amit.
I think so.
It's been a Taco Bell taco. Yeah.
But yeah, I mean, there are other companies out there too, and not as like Air is one of them, but that are undervalued by the market, that are maybe Open Door makes it, maybe not. But like Carvana is one of those examples. From a while ago, I had written off, same guy, by the way, Eric Jackson was in Carvana. He was absolutely right about it. Like, it's a business that's doing well. It was chronically undervalued, and you can find those. And if you look at the actual business, you're like, hey, the market is writing this off for dead, but it is not dead. Sometimes you have to hold them for a while. Case in point, PayPal for me. Maybe I have to wait forever. I don't know. But sometimes you get into a company like this one, and the market's like, we've written it off, and it's terrible. And then they're like, oh, actually, we're wrong, and that can reverse in a hurry.
Well, I've been looking for that narrative of how the market will be like, holy crap, we're wrong about Open Door, and I haven't found that part out yet. And I'm trying to think of it. And I think the new CEO, I think the new CEO, if they get someone who's like really, like, hey, we're totally changing everything, then maybe. But that's what I'm still looking for on this one.
Yeah, and I did see like an interesting letter, from basically retail shareholders with several different ideas. Some of them, I don't know like the business super, super well. But they sounded plausible to me. Some of them were very, very vague though. So there's a lot that they could possibly do. And I don't think that the model is flawed. I've done too much home buying. We've moved a little bit too much. It's not really that fun of a process. Maybe some people like it. I just don't. And so I like the model. I just don't like the company. I don't think that they've executed well. I think they've stumbled too much, that they had terrible leadership. Now they're looking for a CEO. So at some point, I think that a company will be able to execute on this, but maybe not Open Door.
Okay. Nvidia, Tanner, you're the one who got us into this thing. We've said we're grateful for it plenty of times. So now tell us, can we get to 200 on Friday? What's going on?
I mean, I don't I don't think that's how it works.
What do you mean that's not how the stock's supposed to go up? What do you mean that's not how
you're the expert?
I think the stock's going to go up. I don't think me getting you into it means I know where the stock is going. I've got no clue. But I do see a really bullish quarter, and I think we beat. I also wanted to talk about their announcement today, which I thought was super exciting. I also saw, if you guys saw the early buyers, I had some questions about that as well.
Okay, so why don't you explain what this is? It's a new humanoid brain. A lot of stats everyone can see on the screen, and then
Yeah.
Meta, Amazon, and Figure are adopters.
Yeah, why Meta?
Huh, that's a good question.
Why Meta? Because they're not in AV and they're not in humanoid robots unless they are thinking about it. And that definitely seems like a very what's his name? Zuck thing to do is get into humanoid robots.
Let me play the video real quick.
It's not the video I thought you were going to play.
What video you thought I was gonna play?
The announcement in announcement on stage.
That wasn't today though. That was a while ago, right?
Yeah, but it's still talking about the Thor
So-
chip that will be deployed in their AVs, which is going to be the exact same for the robots as well. They're just physical AI chips, Blackwell powered physical AI. So taking in a ton of sensor data and
I think
smarter
I
brains.
got it. Okay, this is it.
Announcing that our next generation processor for the car, our next generation computer for the car is called Thor. I have one right here. Hang on a second. Okay, this is Thor. This is Thor. This is a robotics computer. This is a robotics computer. It takes sensors and just a madness amount of sensor information, process it, umpteen cameras, high resolution, radars, lidars, they're all coming into this chip. And this chip has to process all that sensor, turn them into tokens, put them into a transformer, and predict the next path. And this AV computer is now in full production. Thor is 20 times the processing capability of our last generation Orin, which is really the standard of autonomous vehicles today. And so this is just really quite incredible. Thor is in full production. This robotics processor, by the way, also goes into a full robot. And so it could be an AMR, it could be a humanoid robot, it could be the brain, it could be the manipulator. This processor basically is a universal robotics computer.
Yeah, so essentially what they showed off is a more packageable product with, the actual plugs to go in it and everything that will be a little bit more easy for, a company like Figure to end up buying and put straight into their humanoids. But yeah, I think that that's their next big S curve. And some people think it's going to be bigger than data centers. I have some problems with that idea. I think that people don't know the full, a data center is just a large brain almost in a way. So I don't think that anything will ever be bigger than the data centers, because even humanoid fleets will still need data centers. Everything will need data centers. So I don't know if it'll be bigger than what they're currently working on right now. But
are you saying humanoids will need data centers because the models that the humanoids will be trained on will need data centers?
Yeah, one robot will learn something, will, almost get hit by a car and then go, okay, I should look left and right, and then send that to the thing, and then all other humanoid robots will look left and right before they cross the road. There'll just be constant labeling, understanding. The same thing with cars on the road for Tesla, right? The cars are taking in a ton of data. The interesting part is that the data gets sent to a data center and then the entire fleet gets upgraded, essentially. So I think that, every large car manufacturer that wants to get into their own self-driving, fleets will end up needing data centers. The robots will need data centers. That's, that's just the thing.
Roy, you want me to play this video?
Yeah, it's 2 minutes. It's just this was on Rehard Jark's channel. He's got the full thing at AdSense. But this is a former Nvidia executive that I thought really talked about why a lot of people are underestimating the TAM, the size of data centers. A lot of people look at NVIDIA like, well, what about when the CapEx slows down? And he basically makes a really good point of why it's not. So let me play this. Let me know if you can't hear it.
Limited to 100 megawatts. The old generation, which was
A little quiet,
not even
but
that old, Hopper H100, the best that you could buy roughly a year ago, limited to 100 megawatts. It became 4,500 GPUs in 1,400 racks. Imagine that, 1,400, that's a large data center. And in aggregate, that would generate 300 million tokens per second. So think of that as like, yesterday. And if we think about the Blackwell GB200 NVL72, that is the mainstay of what's being sold now, although it is, as we speak, transitioning to the GB300 being able to be purchased and deployed. But we're very early on there. So the numbers here, and again, this was back in March, GB200, NVL72, it is now 85,000 GPUs as opposed to 45. So roughly double the GPUs. It reduces to 600 racks from 1,400, so less than half. And I don't know why they didn't say 12 billion. 12,000 million tokens per second, 40 times the tokens in the same data center, same 100 megawatt power. You would then, notice you would go from 1,400 racks. So your data center would only be half full of racks. You could have lunch in the other half or a party or whatever. That's the staggering change of moving forward. So if you're trying to generate more tokens per second, you're going to be limited on power. How do you get more? You buy the next generation. That's literally what we're going up against. People buying an entire new cluster above last year's expensive cluster because I'm limited on power and I need more tokens per second.
dude, 100%. So this is why AMD is not winning. Okay. Because everyone goes, hey, if they're so much cheaper, why don't you just buy more? Okay. And do it that way. Well, the truth is that the problem is not the GPU. It's not the ability to compute. It's how much can you get versus how much energy you have. It's total cost of ownership. That's the real bottleneck here is TCO. So the less chips that you can have to produce the most amount of tokens, it has to be what you're going to spend all of your money on. And that's worth such a premium. And that's why NVIDIA is going to keep winning, even over, custom silicon and everything. So, yeah, that was awesome to listen to.
And I don't see any indication of this. It's more than Moore's law and Wright's law both in play. Unless the technology hits a bottleneck where it can't continue to scale and grow, this phenomenon will continue. So it doesn't mean that every single massive company is going to continue to spin at the current rate that they're doing. For some, it's not sustainable, but the demand is there. The demand will continue to be there. And I'm glad I bought more NVIDIA.
Yeah, the new racks, by the way, for their Vera Rubins and Vera Feynmans are expected to not house 72 GPUs. I think it's something like 576 or something like this. It just is growing exponentially more in a single rack because they're putting more dies into a single chip, which is only going to make the same customers that just purchased a whole data center worth of racks have to upgrade because you're going to get more token generation for the same amount of power supply. But the interesting thing about how fast AI is growing right now is that they're rapidly trying to increase the energy. So it's not just upgrading current systems. It's about deploying 5, 10x more megawatts of power or gigawatts of power, and then making those even more efficient than what they were before.
So everything you both said sounds very logical. Makes a lot of sense. Why is there a narrative that is being formed that AI CapEx is dead?
I think part of it is, I think there's two things. One is some people realize that's not true, but they want cheaper shares. And then the other is there's always a bit of jealousy when you're not in a stock, when you're not in a position to look at excuses or reasons why it's too expensive. And when you're the largest publicly traded company in the entire world, over $4 trillion, it sounds immense. It is immense. So it's easy to look at that and say, okay, it's just too expensive. But the only thing that people can point to is they say, well, it's a finite demand. Now, some products do work like that. That once you hit the certain threshold, then your sales start declining just because you've hit most of your addressable market, and the differentiation between what you're offering and what people have now isn't that immense. We're seeing that, we've seen that for a while with Apple. We've seen that with smartphones. This is not smartphone. This is something that is going to grow massively. The TAM is immense, and I think underestimated. I don't know, like people have been underestimating NVIDIA's growth ever since this whole thing started, myself included. But thankfully, Tanner pounded the table loud enough where I was like, okay, maybe I should listen.
You know what? I'm sad because Carl S. is in my chat and he said, nobody is making money yet. And I'm just sad I haven't taught them well enough. But Carl, they are making money. Look at the margins that Google Cloud is getting right now. Amazon is getting right now. If the customers are actively buying from them, and this is the thing, right? It's not like they're putting cables in the ground or setting up some infrastructure that we're hopeful will sell 5 years from now. These hyperscalers are saying, hey, customers are buying, and everything that we are actually standing up right now is immediately running so much that our GPUs are actually melting. Not hypothetically melting, actually melting. So that's the crazy thing here, is that they're overworked right now. They're capped at supply. Yes, they're actively making money. The Jensen has that very famous quote: "The more you buy, the more you make." Right. So
are you saying this narrative is completely full of BS? The idea that CapEx is dying out? Because I just saw those earnings. We all just saw those earnings, and outside of Tesla, it seems like all of them are spending way. Well, Tesla is spending way more, even if they're not making as much money. Right.
Go to Alexander Wang's Twitter, if you can find that tweet where he said all these claims about Meta not growing their AI, it's completely false, and we are spending more and more and more every day. I forget the exact quote that he said, but he just said, the narrative is completely off. We are in full growth mode.
So okay, so let's go deeper into what's like. Do you think these are hedge funds? Because this narrative is coming from somewhere. Like, where is it?
Yeah, sure. Maybe hedge funds, that Nvidia is actually one of the most under purchased of the Mag 7.
Can we talk about that? That is insane. Morgan Stanley's 13Fs show that Nvidia is the most underowned Mag 7 stock.
Yeah, based on their weighting in the S&P 500.
I don't get it. I really don't get it. Well, okay, so maybe like the one thing that I can think of with Nvidia, because I see these comments, and I've asked others about it that are, in the industry, in the space, or know the company very well. Nvidia has had a large element of cyclicality in the past. That's always looked and been a little bit different. But we have to ask, and we're early enough in this, so maybe I'm wrong, but I don't think AI is cyclical any more than the internet is cyclical. Like, there will be times when it ramps faster than others, sure. But it's not going to be like, Bitcoin mining was during crypto, where it's like, it's very, very cyclical.
It is, it's truly sad.
Yeah. And if it is cyclical, the cycle looks like there's multiple verticals, robotics, self-driving, and then obviously general LLM use cases that are getting better and better, that are going to last for a while. I don't know if it's 10 years, 20 years, 5 years, but it's definitely not 12 months.
Did you guys read the memo that Tobias Lutke put out for Shopify and said you have to? So one, AI is not a slight want in your resume; it's a must-have, and that they'll set up every training measurement and everything, that you have to be using AI for everything. And in fact, they even Toby even said in his letter, this was an internal memo to the entire team. He said, you'll start to feel like you put in one question, it doesn't give you the exact answer, and you say, oh, forget it, I'm just going to do it myself. That cannot be the acceptable response. You have to figure out how to prompt to get the answers that you're looking for. Okay. They said they'll buy every single piece of software, like if there's Cursor or whatever name, they'll buy every single one. You tell us what you need. And then for the team or for the team managers, they said, if you're going to hire, you have to prove to us that AI cannot help you get to the productivity levels needed for your project to be done. So they're in a hiring freeze unless you can prove that you've done everything you can with artificial intelligence.
And guess what? That means Shopify is going to get margins to go higher. If they are demanding productivity out of their employees and you're fired if you can't show us how you can become more productive, that's the right way to do it.
Yep.
Which means earnings go up, the multiple goes up, and obviously the data center spend on CapEx has to go up if thousands of people at Shopify are using it.
Yeah, I mean, Nvidia just...
My three biggest holdings we talked about today, by the way.
Yeah, to Nvidia,
Shopify, and then SoFi.
Yeah, Tanner took over the channel today. There you go. Go ahead, Roy.
I was just saying, Nvidia, it just feels so easy here. Like, unless you think AI, and there are still a few holdouts, but not many, that think AI is just a bubble, it's just hype. There's nothing real about it. Those that are actually using it more than just like interfacing with Grok or ChatGPT, like it's tangible. It has a huge impact on almost every space and industry. Not every company has figured it out. The AI is not the solution. It's a tool, but it's a tool that's like a Swiss Army knife. And if you figure out how to use it in your business, you scale and crush your competitors to the extent that they have no choice but to use it, figure it out, or die.
Bro, but it's so logical, right? Like in 2010, if you were hiring someone and they didn't know how to use the internet, like you'd be like you don't know how to Google something, you know? Like like in the future, it's like if you don't know how to use AI, which requires being creative and being able to prompt correctly, and then probably a variety of other skills, yeah, you're not going to be able to get that job, which demands the CapEx spend if there's that much demand on the end user side that's engaging with these AI products.
Yeah. Yeah. And you know what's funny is like people say, oh, well, no one in AI is making any money. I saw that recently there was a report that came out that said since ChatGPT 3.0 launched to the public, the Meg 7 companies on average have made 145% increases in their earnings. 140, like imagine Google making 2.5x more dollars than they did back in 2022 or whatever the date was, right? It's like, it's so hard for me to fathom. These are the largest companies in the world, and people still treat them like, oh, well, they're big and they're slow. These are the Titanics, right? No, they're moving like speedboats right now. They're just huge. Like, that's why I get so frustrated whenever, you know, I was listening to Compound and Friends, they're like, oh, well, other sectors need to catch a bid because Mag 7, like the whole market can't go towards Mag 7. It's like, they're making all the money. They have all the flexibility in their earnings. The margins are expanding still. And like,
that was Tom Lee's argument, right? He was like, but these are the companies that are winning.
Yeah. Yeah. Like we just saw Amazon just come out with a product that offers like way lower rates for kids, like 18 to 24 to sign up for Amazon Prime. I'm like, they can just do whatever pricing they want. They make so much freaking money. It's so hard for any company to even remotely compare. Costco has margins that are this thin. Open Door has margins that are this thin. I know they're very different businesses, but it allows for zero flexibility in their business model. Okay. Big tech has such large margins that if they need to lower their margins for a quarter to stomp out a competitor, it happens like that, right? Microsoft with bundling to kill Zoom, to kill Slack, it happens immediately. The bigger legacy businesses that cannot operate as quick, there's no flexibility, and so they just get eaten away by their competitors. So I still think big tech is where my money needs to be.
Yeah, and it feels like any dip on Nvidia in particular, it gets bought, or it should get bought, which is kind of what we saw last week. The question now is, you know, what results do we get on Friday? So, okay, so last question, Roy, Friday, you think they crush it? There's a 6% implied move, or do you think there's any risk?
I'll just say that I was so careful with covered calls. I basically didn't even sell them. Normally, at least recently, Nvidia has not moved significantly on earnings, and it may not. But this is one where I don't even run the risk of covered calls being destroyed. Now, largest company in the world, it's not going to move like 40% up or anything ridiculous like that. But I think that there's plenty of upside with this company over the long term. Yeah, I wouldn't be surprised if we see it up, like 10, 11, 12%. We may see 200, or it wouldn't even shock me if they're really good earnings, that it taps on 200 and comes back and consolidates and needs a little bit more time to break that. But like anytime that I look at another Mag 7, like there's two that I wouldn't buy, but like the rest of them, like great businesses, really strong, really nice. And I look at them and I'm like, I'd just rather own more Nvidia. And every one of their earnings calls, they're not maybe saying Nvidia all the time, but they're saying Nvidia. So it's just, I mean, who am I to question it? I'll just buy more. It's great.
Yeah, a lot of these big companies are saying, hey, we need to reduce reliance on Nvidia, stuff like this. It's because they are so dominant. Because the pricing power that Nvidia has by selling 75% of all data centers is insane. And they just came out with new products that allows them to connect massive data centers together to using photonics or optic cabling to be able to allow chips that are further apart to work almost like they are together. Okay, that is incredible. That's the difference between AMD and Nvidia, is being able to use more chips in one system. So they only get better and are solving the problems for larger and larger data centers. Like before, they might be able to sell 100,000 chips into a data center. Now they can sell 500,000. Now they can sell 1 million into one. And so the order sizes get even larger as the hyperscalers realize that every chip that they can stand up, they immediately have capacity to fulfill them. They get orders immediately. So they can make large purchase orders to NVIDIA. And you see, like even Tesla are going to Samsung and Intel and all of these companies because they can't get TSM to make any chips for them because they're dealing with NVIDIA full time. Like TSM is just a proxy for NVIDIA, and people have to step away to other names because they cannot deal with them because NVIDIA is paying top dollar. It's incredible.
I love when Tanner gets this aggressive. It makes me know my Nvidia is going to go up.
No, I'm just excited.
Yeah, it's like when he gets passionate, I know Nvidia is going to be okay. So
yeah, at TSM though, like, can we talk about that for just a second? Like, either of you guys own it, or why is the market disrespecting it? Other than like China risk, I don't understand.
Is it disrespected? Or
yeah, I mean, it's not. It almost has guaranteed purchase order through NVIDIA, so I don't get why it is not at the same multiple, but I'm not personally buying it.
When I was looking at it, this is a week or two ago, is under 30 PE. It is international, which tends to trade at a little bit of discount compared to the United States. 25 PE ratio. Forward PE is 23.8. It's like, revenue's growing 40%.
Wait, their forward PE is 23?
Yes.
Yeah, they are very cheap compared to NVIDIA.
Maybe we need a TSM deep dive. Maybe we need to.
Yeah, I'm thinking about it. I need to find some time to do that.
Even without a lot of due diligence on my part, I still put it in the stock draft because I do feel very confident in it. Just because even if they deal with one customer, they still have full, like, your fulfillment will still be full for the rest of the years, as long as NVIDIA is working. But they don't have one customer; they have many.
Right. All right.
But no. Hold on. I want to talk. Okay.
You've been talking all podcast. Go ahead.
I know. I'm sorry. But dude, I've been thinking about this Thor chip and the fact that Meta purchased it. Okay. I don't own Meta, but I think that what maybe Tesla is catching a bid for, which is like having the largest humanoid robot, and people are putting this $10 trillion+ valuation on the idea that, they're going to be bigger than the 5, most biggest combined businesses or whatever. I wonder if Zuck is actually trying to go after humanoid robots, if he's trying to create the smartest LLMs, have the biggest consumer platform in the world. And I wonder if Meta does what Tesla wants to do. And if that's the sneaky bet to purchase right now.
So there was an article back in February, Bloomberg, of Meta potentially taking a strategic stake in Figure. We don't have any specifics on that, but that is where I think Meta. That's the first time I heard a headline of Meta in their $40 billion funding round. That was the first time I heard an idea of Meta potentially getting into the robotics world. So maybe they are, but your point is Meta wants Tesla's multiple by going after Tesla's perceived biggest S curve, essentially.
And their multiple is closer to Google than it is, anything. Like even towards, it's closer to Google than it is Nvidia. They're a fast grower, highly profitable. They've got a relationship with half of the world. I don't know. It does seem interesting that would be the name that also knows you very well. They're getting into hardware. Are they the next Apple? Are they the next, bigger than Apple? Are they the biggest company in the world? I mean, not bet against Zuck. That's been a bad bet, dude. He's young. He might literally be the next Elon.
Okay. So when are you buying Meta?
I mean, maybe this week. Like I've given it so much disrespect my whole life, and I do worry about some sort of cap on total users. But Apple faced that too, and then they still found out new ways to monetize, all of their customers. And I just I don't know. Humanoids is going to change a lot of things, and I would not. So
you buy Meta over Tesla on the humanoid potential thesis. That's what you're saying.
Well, I mean, whenever you put it that way, no. Whenever you put it at the fact that one's at like 190 PE and the other one's at 30 PE and is actually making money and is also, I think, actually has a less market cap.
What if Tesla's 190 PE goes to 30 because robots go S curve, right? Like, I mean, or you just don't think Elon can pull it off?
Well, I do think Elon can pull it off. I do wonder if there's a percentage of the population that still won't deal with the robots because of political issues and these sort of things. How long does that take?
Mm-hmm.
Like, it's actually weird, dude. The first time I saw a Cybertruck, I was like, oh, that's a cool vehicle. Like, that's cool. And everyone wanted it. And now it's like, oh no, you bought a Cybertruck? Like, oh brother, I feel bad. Like, it's like your resale value on that truck has gone down. And I apologize if you're one of those owners, but it is like a political statement now, and no one wants to have a political flag as their vehicle.
Yeah, so, I think that the easier play for Meta is, like, they might get in robotics, they might not. They've never manufactured anything. That's not as easy of a pivot, as people think. But Zuck is an excellent CEO.
Yeah, but they could just do it through Figure. They're not going to manufacture the Ray-Bans. Ray-Ban's going to do it.
Yeah, well, I mean, Figure hasn't really manufactured anything either in mass. Like, it's one thing to have prototypes. That's very true. It's another to scale. That's the hardest part. But I mean, they brought in an immense amount of AI talent there, and that's not just to look showy or to improve Llama, so it's even more functional across our ecosystem. They're doing something. I think it's tied to the metaverse. It might be. I think we talked about this before, but like the Ready Player One type of thing. And I hope not, because I'm not the biggest fan of Meta. But I mean, like, that would be really cool. Have an immense amount of TAM if they're able to pull that off. But there's a lot of different vectors and ways that Zuck can go. And I think he's going to surprise a lot of people. I'm not going to invest in it personally, just because I don't like what they do largely. But I think Meta is a pretty easy bet even here.
Yeah, I think Tanner, you bring up a good point. Like, here's the bear case for Meta. What if Zuck doesn't figure out AI? And the reason I say this is because he didn't figure out metaverse. Now, I know they're using AI for ads, but at the end of the day, ads is ads. That's been the business for 20 years. If he doesn't figure out another vertical, because Llama, do we want to say it's a failure? Not really being used?
No, I wouldn't. It's too early.
Okay, too early. The glasses, they've still got some room to prove.
Highly bullish on the glasses.
Bullish on the glasses. And then metaverse, I think we can agree, is a failure. So it's like the Threads is advertising. Facebook.
I wouldn't even call Meta. I think metaverse is almost on pause. They were too early to the world.
It basically, metaverse needed LLMs that needed AI. Now it's here. We'll see what happens.
No. But metaverse is still all of us living in a virtual world, interacting with each other. Like that. Remember 2021? That was like, do you really think that's gonna happen? Like,
no, but I think people see the vision for the Apple Vision goggles, and right now they're not great. Maybe in a few variations, they will actually look like something that people want to buy and wear. Much lighter, smaller batteries, not disconnected and in your pocket. Whenever that happens, and there's like a lot of developers that are working across multiple ecosystems, I do actually think that it will take off.
Okay, so my point is just like I think he's getting all this AI talent, but I think your point is valid, Tanner. Like maybe they're doing robots. Like they've got to utilize the talent in some way other than advertising. And I think Zucks knows that. And if you believe in Zucks, then he probably ends up proving everybody wrong.
Yeah.
And if they go after robotics and they continue to iterate the metaverse, the goggles, the Quest 3, they create a dynamic world that it's basically inferred by LLM, so it continues to generate and update. I mean, they win or they do very well in the real world, and they do win or do very well in the virtual world. That's a scary company as far as power, as far as strength, as far as size.
Okay.
Yeah. Well, at least the U.S. government will have equity share in them. All right, ladies and gentlemen, thank you all so much.
That's a topic for another day. That shit, I don't know.
Yeah. I didn't want to keep going on that, but
real quick, I love Elon. I'm an Elon fanboy. I know people hate Elon. I like Elon. I really respect him. I think Grok is losing badly to ChatGPT because if people haven't seen what Elon's been tweeting over the past, I think at this point it's almost a week.
About Imagine?
There is a feature called Grok Imagine where you hold a photo down and you can turn it into like a 6-second video or 10-second video. It is the most annoying feature ever. It's pointless. It's literally used for nothing other than tweeting a meme or something. There's no real fundamental human value to it. And Elon's been tweeting some very, just to be honest, sexual imagery to get people's attention on this. And it's disturbing objectively. And it feels like they're going the sex angle to get AI to gain momentum. And I don't like it.
I hate it, dude.
Yes.
The waifu stuff has to go. I knew that was going to happen from like developers, like L2s were going to do that, but I didn't think that the main company, like imagine Microsoft making that, like it's just gross.
And you have Elon, who is like, hey, humans need to reproduce, get busy with that, and he creates that, which, I mean, if it's like any other thing like that.
To your point, I think Elon is desperate on Grok because Elon has been the like only person for the past 10 years consistently saying we have a reproduction problem. And now he's literally doing this shit, which is only going to isolate.
He did tweet about that, actually. He did tweet about how he thinks that AI will either kill or increase the amount of babies, but he did say that it will have some impact on fertility or something like that. He did tweet.
The point is this stuff is only going to lead to the potential of less human interaction because more people will be interacting with the romantic version of AI. And Elon knows this, but I think he's so desperate to get people to use Grok that he's going through the sex appeal, which is like, to me, he's thrown in the towel almost in terms of catching up to ChatGPT because I don't think he's found the viral loop. It's not Twitter. No one uses Twitter. We use Twitter, but realistically, no one uses Twitter. Like just to be honest, Threads has almost the same amount of DAUs as Twitter, and Threads
really,
250 million. And Meta actually discloses this because they're a public company, so they have to. So I don't know, bro. I think I use Grok. I pay for it, but like I kind of think ChatGPT is winning.
Yeah, so I talked with Will Rind. He's the CEO of Granite Shares over the weekend or on Friday, and I asked him. We talked about AI. One of the topics was LLM usage, and he shocked me because he said his favorite, the one that he uses daily, multiple times every day, is Grok. I was like, man, that's not been my experience, but cool.
I do use Grok.
Will Rind is on Twitter. He's part of like finance, like,
and that was the argument he made. Yeah.
I use Grok constantly. I use ChatGPT constantly. Haven't used Gemini too much recently, but honestly, I bounce between all three of them. And that's pretty unique, I think, to people like us. I think a lot of people download ChatGPT and they don't try a single other thing. But
it's not to say Grok is dead or anything. It's going to do very well. It's just like, I think he's trying to get a shortcut. Like, and I wouldn't be bringing this up if it wasn't incessant on my feed. It's like 50 posts a day of him retweeting this shit. And I'm like, you're using your influence to really hammer down this point. It's not about the America Party anymore. It's not about politics. It's about Grok Imagine. And I'm like, something's up here. It doesn't feel the same.
Yeah, I'm almost at the point where I need to mute Elon, and I don't like that because sometimes he pays something that's just amazing and critical. I don't want to miss that, but I also don't want to
Like
be
the 50
checking.
million H100 equivalent ships. That was pretty unique and awesome.
Yeah, and of course all the SpaceX stuff. He can post about that all day, and I'll eat it up. But yeah, I don't want to be looking at X and then that pops up while my 12-year-old daughter is glances, and I'm like, no, like. Ugh.
It's weird, dude. It's very weird. But regardless, Nvidia gets paid. Nvidia gets paid.
Nvidia gets paid.
Yep.
All right, folks. That is it. Thank you all for joining. Wednesday, Tanner, Jose, and I will be live. Roy, if you're free, you can make it. If not, no worries. But we will be live for Nvidia earnings, and we're gonna see what Jensen can put up. So
thanks, guys.
Thank you, everybody. Appreciate it. We'll see you guys next week. Bye, everyone.